What has the industry done right to ease the collateral burden?
Well, when it comes to the collateral burden and some of the things that the industry has done, I think it's pretty unprecedented. When I think about where we were in 2008, the G10 Pittsburgh meeting that sort of led to some of the principles in collateral management that led to Dodd-Frank. The industry had begun to work on, to a large degree, on improving operational process, had developed best market solutions. But I think the most interesting thing to me is the fact that the way the largest dealers in the world came together to work with FinTech organizations in the infrastructure to get through that first big wave of initial margin last September. I don't think anybody had really ever seen the likes of the investment banks who are so fiercely competitive working together, in an industry solution. I think that really tells you just how large of a problem it was that they had to band together, because they're always trying to find, who's the smartest, trying to identify who the smartest firm is and where the smartest individuals are. So the fact that they would band together and develop this infrastructure, which seems to have worked quite well through the first big wave, I found that to be fascinating, because I just had never seen that in decades.
What more can financial services do to facilitate industry-wide change?
So when it comes to industry-wide change that's down the road, I think that template that I alluded to about working with each other when the problem is so large that one bank can't solve it themselves or it would be too costly, as well as working with the infrastructure players. So I think that in the derivatives space, I think some of the first real strong FinTech organizations saw the derivatives space as a kind of a ripe field for innovation and for being that connective tissue in the market that really brings together the different parties into one solution. So I think that template was set, and I think it should hopefully be something that'll be followed through when future issues and challenges come up.
From an operations standpoint, how has collateral management evolved over the years?
I first started in collateral almost 20 years ago, and it was really right as Russia was defaulting on its debt, and which led to the long-term capital management. So when I look at that, that's kind of a large time frame and a couple of decades now. There were so many spreadsheets, so many user-defined tools that were driving and running some of the largest banks' trading books that were just so rife with risk. And I think that a couple of decades ago, those market disruptions brought collateral management into the forefront of at least the realization of just how much improvement needed to be done from a risk perspective. The operational risk that was associated with the process even 10 years ago, before the financial crisis, was, I think, significant. I mean, just the fact that probably collateral management was one of the last business processes that was run and communicated through email until after the financial crisis. And still, it's probably just over a little bit of half of communication is now done in a secure fashion. I think that really kind of tells you just how far collateral has gone when we talk about spreadsheets and emails and faxes and phone calls to that margin delivery, but still now only maybe 2/3, not even, of communication being done. There's still a lot of work that needs to be done. And I think the wave of regulation, the volume of that margin and collateral activity that drove, will continue to drive, improvements in the process.
Is it fair to say it's gone from an afterthought to something that's mission critical?
Yeah, I think that's fair. And the other thing that I always think about is that we have not had volatile markets really since, for the last 6-7 years. And having gone through a number of crises, market disruptions, the volume is not just doubling, it's more tripling, quadrupling. That's the kind of increase in margin activity that you will see in a market disruption. So it's really like peace and war. We've been fine during peacetime, but if we had not done some of these improvements with the regulations that have hit, that have increased the margin activity, and surely market disruption that's going to come at some point, I don't think that the industry would be feeling as comfortable as it is right now.